Welcome back to Wall Street Confidential. We know that Jim Cramer for a while now has been a fan of high-yielding stocks. I want to know if there are any bargains out there right now.
I thought it was great. Forbes.com says that I suddenly am interested in dividends. Of course, the entire time of this year I've been emphasizing yield.
Right.
And why I've been emphasizing yield is because it's twofold. One is bonds offer no yield at all. I mean, except for unless you want to be in crummy bonds, which I never like to reach for yield because of bad credit. And the other thing is because you need a floor. We get these sell-offs, these vicious sell-offs, and I don't think we're out of the woods to have vicious sell-offs, where you're down 300, 400 points and everybody pulls their bids and you say, well, hold it, why? What do I do? What can I buy here? It's down a lot. We've been on ActionAlertsPlus.com be buying an Eaton, say, which suddenly goes down to 5% yield as the stock goes down. Accidentally high yield, I call it, because the dividend was puny, but the stock went down so much it's okay. I see it constantly. I see it in Caterpillar right now, John Deere, which I own for ActionAlertsPlus.com, Nucor, which is now too high because it's moved up 12 points from where it was just a week ago, but it's a great benchmark. Verizon under 6%. Is still okay. ATT, you see that rally big. These stocks come back fastest, and they come back fastest because what happens is that people don't sell them. They don't sell them because they bought them for the yield, and they bought them for the dividend. They're fine, and the earnings risk is mollified by the fact that the yield is going to keep them in the game. Now, I'll tell you what's really interesting is DuPont and Dow. They're rallying even though people think that their dividend's not safe. I think it's because they'd rather lay off people than miss the dividend. So, I mean, literally, that's pretty brutal to say, but that's what I think they're doing. But I would emphasize to people that as stocks roar, you've got to trim back a little because then your yield isn't that high. But that this has been the safest place to be, and it's not going to change. And I like to have a portfolio here. Dave Peltier has helped me immensely on this, Dividend Advisor. I like to have a portfolio even here, where even up this much from the bottom, you're thinking about yields first, and then you can buy them on the way down if the market turns.
Just one last question, because we've seen Freeport McMoran, for example,
right, that was the worst one.
Strike its yield. Any signs that a company might give up its yield?
A great question for Nushin. What I would tell you is any pure commodity play, pure, is a possibility to give up the yield because Freeport had a lot of debt. Well, they paid down a lot of debt. They paid down $10 billion, but they're pure commodity play. And the commodities, while I think they're done going down, I actually think the Freeport dividend cut is going to mark the bottom in Freeport, but it's down 120 points. I am concerned. I'll give you the example. Dow's a commodity play, but the company has just put the line in the sand on that dividend. But I think that if you buy machinery stocks, if you buy telco stocks, dividend stocks, utility stocks that have good yields, you're safe.
Okay, I like that. All right,
Thank you
so much, Jim Cramer. Check out that article on Real Money Tempted by High Yield. Stay tuned for more Wall Street Confidential.